What's up, everybody? Google just released their second quarter earnings, and there are some companies where I genuinely look forward to every earnings report. They always seem to deliver. They always seem to be doing, pretty much what the management told you they were going to do, just a little bit better. So we're going to look at this report. I do have a small position in Google. We're going to see what we can expect for an investment on Google going forward. And I'm going to let you know what I'm doing with my position here today. If you get value out of the video, subscribe to the channel. Now let's get into it. This was another good, solid quarter from Google. They basically beat across the board. The top line growing 14%, I think was a little bit better than most people were thinking. Cloud had a great quarter, growing 30% year on year. But the big one that I'm looking at is Google Search. Google Search is still the heart of this company. It not only is the biggest chunk of their revenue, this is the biggest chunk of their profitability as well. And as I'm sure you know, there have been a ton of fears that, with AI and ChatGPT and Grok and everything else that, Google Search, their dominance might be waning. They might be starting to lose market share. They might be starting to lose eyeballs. And I was wondering if you might start to see little hints of that in this quarter. But you really don't. Google Search is strong. This was a good quarter for them. This whole narrative that Google is dying or that AI might be the beginning of the end of Google, I don't see that playing out. And just anecdotally from my experience, there are things that I've been starting to use ChatGPT for, but there's also no doubt that these AI overviews on Google Search, it's improved the Google Search experience too. I don't think Google is going to be giving up the throne here that easily. And across their other segments, there was really a lot to like here. The operating margin coming in at 32% is excellent. Margins are up slightly, which is what you would expect for a company that should be benefiting from scale. For example, the expense to Google to sell some more YouTube ads is really quite negligible. So as revenue increases in these areas where marginal expense is low, then you'd expect the bottom line to be growing faster than the top line. In other words, you would expect the margins to be going up in a company like this. I think this chart is about the most beautiful demonstration of this possible. This is Google Cloud's quarterly revenue and operating income going back for the past 5 years. Not only has the top line growth been just incredible, they've grown literally every single quarter, but the margins have gone from significantly negative to breaking even a couple years ago, then, low single digits. And now you're looking at about 20% operating margin on this segment, which is a record for them. And I don't see why we wouldn't expect the operating margin here to continue to expand. Frankly, nothing in this report says dying company. 19% growth on the bottom line and 22% growth in earnings per share. So they've had some share buybacks. So EPS has grown faster than net income. If there was one thing in this entire report that investors could point at and, feel a little bit iffy about, it would probably be capital expenditures. I think a big part of the proposition or the bull thesis behind these large tech companies is that, they're mostly capital light businesses. They don't have large capital expenditures, at least not historically. They're basically just big cash cows, and they're able to use that cash to either buy back stock or make acquisitions. But we see capital expenditures has been going up, and this quarter it reached an all-time high of $22 billion. Not only that, management said on the call that capital expenditures for the full year was going to be around $85 billion. So basically they're saying the CapEx in this quarter, it's not a blip. We're going to have CapEx like this for a little bit here. And with CapEx so high, with so much cash going back into this, the free cash flow is not going to be as high as it might otherwise be. We see free cash flow for this quarter is down a ton, only $5 billion in free cash flow. That is a lot less than where they have been. Now, this is something I want to keep an eye on. I understand why some investors might not feel all that great looking at this. But Google has historically been an excellent allocator of capital. They're investing a ton in AI right now. They're trying to be a leader in cloud. They're trying to make the next 5 years of this chart look as good as these 5 years here. And I feel like I followed Google long enough to trust that management is making the right moves here. Now let's go back to our sheet and let's make some assumptions about the future, see what we might expect for a return on our investment if we invest in Google today. I think this base case I have here, which I put in these numbers earlier in the year, I think this is a bit too pessimistic. As I said, a lot of the fears around Google Search, the heart of their business, they don't seem to be playing out. In fact, if I had to put my money today on where growth and margins are going to be in the future, I think my bull case pretty much had it right. 12% revenue growth over 5 years, 32% operating margin. I think I need to up my base case to reflect the fact that my fears around Google Search have definitely gone down. This seems reasonable to me, neither too optimistic or pessimistic. We have operating income growing to about $200 billion in 5 years. I'm giving them a multiple of 24, which is a bit of an expansion from where they are now. But for a company of this quality, I do think they're a bit undervalued. And if these assumptions come true, you're looking at a 19% annualized return on an investment today. Even if I gave them just a 20 times multiple, you're looking at a 15% annualized return on your investment here, which would be a double over 5 years. And I think my bear case is way too pessimistic. I put in these numbers when I was really concerned about their search business. I was assuming growth slowed to mid-single digits, operating margins pulled back significantly, and they would trade for just a 16 times multiple, which may seem really low, but let me tell you, when there were scares around Microsoft or Apple or Meta not too long ago, all those companies reach multiples way lower than 16. So it's not insane for quality companies to get really cheap when sentiment moves against them. But I'm going to up my numbers here. I'm going to give them the benefit of 28% margins, which I think is more fair. I'm going to keep my multiple in this downside scenario at a 16, and we're looking at 3% annualized over 5 years, which probably doesn't sound great, but in a pessimistic bear case, this is pretty decent. The risk reward here is not bad at all in my opinion, and we haven't even looked at the bull case. I mean, this quarter saw year-over-year growth on the top line at 14%. And with some potential acceleration from AI, I mean, this could reach mid to high teens. If I give them 15% revenue growth and also the benefit of some expanding margins, which I think is not unreasonable at all, you would expect a company like this as it scales out to have their margins increase. And if I give them a 30 times multiple, which would be on the high side for Google, but certainly not unreasonable for a company like this, you're looking at 30% annualized returns. That's fantastic. So, bottom line, I think Google looks really good from here. If you're looking at this at a future date, or if tomorrow the market opens and the price of Google shoots up or down, or who knows, you can see what I'm expecting for a return on our investment if our assumptions in this base case come true. So if Google drops back to about $150, then you're looking at 20% annualized. Now, as far as what the market reaction to this earnings report was, you can see that, after hours, they were actually down a bit. They were down a couple percent off this report, and then they were up about 6% from there. So, roughly 4% from their close. Now it looks like they're up 2%. So, it doesn't seem like the market is making a huge move based on this report. Now, as far as what I'm going to do with my position here, I'm going to do my favorite thing, which is nothing. I'm happy with the amount of Google I own. If people want to buy more Google at this price, I would totally understand based on what we're looking at here. But I think for me, I'm just going to sit still. If Google drops back down to this 150s, 160s range, I'd probably be looking to load a little bit more, but I'm in no rush to add right now. If you got value out of this video, subscribe to the channel. We are really close to hitting 500 subscribers here. So thank you to everyone who has followed. Let me know if you agree or disagree with anything I said. And if you own Google stock, what did you think of the quarter? What are you doing with your position? And I hope to see you all in another video.